When you look at valuations around here, and I know you can sort of look at this market, either you could go the traditional bottom-up valuation method or just, I guess, look at the technicals and ride the momentum. But when you look at valuations and all the arguments right now that this market might be overvalued, things might be overpriced here, do you find, I guess, credence to that?
Oh, I think so. I mean, it depends upon which which PE multiple you use, whether it's the 10-year CAPE, as they call it, or whether it's the immediate expectation for the next 12 months. In any case, it's historically high or close to historically high at 21, 22 times for a PE. And so to my way of thinking, if the economy slows, and I think it's slowing, we don't need a recession, but if the economy slows and earnings growth fails to meet expectations, I think there's a problem in terms of valuation at the moment for many stocks.
Many stocks. Well, does that mean, like right now, based on at least what we know publicly, would you be comfortable taking a broad market position right now in U.S. equities?
No, but I'd be comfortable in taking a specific, bet and investment in certain areas which are still very attractive. I know that's the standard explanation that investors basically say, but I think there's some areas in the market that are very attractive based upon a slowing economy and based upon high valuations in many stocks.
Where, Bill?
S&P
Where?
And the NASDAQ. Well, let's talk about a few. I've owned for a long time and have recommended for a long time master limited partnerships for pipelines. These are stocks, these are partnerships, and because of that, they can't be bought by basically by the market, by mutual funds, and so it's a narrow universe. These are stocks like Energy Transfer, ET is a symbol, like MPLX, Marathon Pipeline, which is the symbol there. You know, they yield between 8 and 8.5%. And there's one that I love, I actually love, WES, Western Pipeline, yields about 9.5%. These yields are basically utility yields. They're take-or-pay type of contracts. They defer, because they're partnerships, they defer taxes on their dividends. And so it's a huge, it's a huge attraction to me in terms of yield and potential price appreciation, and they're all close to the top of their 12-month highs.
Along the same lines, you mentioned utilities. Utilities continue to sort of outperform, and a large part of that are their power players like Vistra or Constellation Energy, and that's definitely related to the AI play. Do you buy into that kind of hype? Yeah, I think so. I own some NEE, which is the Next Energy, and I think there's a correlation there between interest rates and between the price of the stock. So I think in certain areas, I think utilities as a whole have sort of been overblown in terms of their move relative to AI, artificial intelligence, and the fact that they use more energy. But there are certain stocks there. NEE is one of them that I like.